Hey family, once again welcome to another edition of the Small Money Big Dreams vlog. Today's topic will be market cap and what does market cap mean to you. So basically you'll hear a lot that people say the market cap, what is market cap? Market cap is basically the value of the outstanding shares of a company. So let's say if a company's shares are selling at, $5 a share, and there's 5 million shares of stock out. $5 times 5 million, 25 million. So 25 million would be the market cap. So this is my rule of thumb with market caps. I am extremely prejudiced when it comes to market caps. Prejudice is an ugly word. I don't like using prejudice. But when it comes to money, I'll use that word. I am extremely prejudiced towards market caps. And let me tell you why. Basically, the market caps and the values of these companies is, as far as you in the community, you want to give the mom and pop shops your support. You might go to your local grocery store instead of a Walmart because you want to, support the small mom and pop shops. And I commend you for that. Sometimes I do it if it's possible for me. Sometimes I don't. I'll be honest with you. But that's in everyday living. That's as far as acquiring products, durable, non-durable products, or durable products. But that's just, how you're living your life. When it comes to investing your money and protecting your future, I believe you should be prejudiced when it comes to market caps. So the three I don't like to use the three main types or classifications of market caps is small cap, mid cap, large cap. Small cap, and you know what? I want to say that small, those classifications are not universal. Those are used differently amongst all different companies. So all different industries, in different countries have different classifications of the caps as well. So I'm going to give you what's a standard classification of caps. So small cap would be $2 billion or less. Mid cap would be $2 billion to $10 billion. And large cap would be $10 billion or higher. And now, over the last couple of years, they've, analysts have come up with other cap classifications. There's micro cap, which would be $500 million or lower. And there's nano cap, and nano's really small. That would be $100 million and lower. Sometimes, as an investor, I recommend you to have a little speculation. And you know what? Go ahead and look at a small cap, even a micro cap of $500 million or less company. But a nano cap stock, $100 million or less, let me tell you a basic rule of thumb that I have that some of you might laugh, but if there are athletes with sports contracts higher than the cap of that company, I stay away from it. Because nano cap stocks are subject to so many market conditions that can completely screw them over. The price of oil changing can completely change the dynamics of functioning of that business and make it fold. The price of materials, the price of commodities, the price of corn, if they're a farming industry company, the price of corn, the destruction of corn crops can cripple the operations of a company that small. So you want to protect yourself from the unknown. So that's why I always concentrate on mid caps or small caps. Small caps is when I'm feeling like, let me go chase growth. But to be on the safe side, $2 billion and higher is what I would concentrate on. Mid cap to large cap. And there's another classification, mega cap, and that's $100 billion or higher. And that's your Walmarts, your Exxons, your really huge companies and stuff. And those companies share prices never really dip. Microsoft, they never really dip lower than $50, $100, $25, and my investment blog is towards people with small money, and you can invest in stocks that cost $20 a share. But let's just say you want to invest $100, a $20 a stock share you could get 5 of them. You could get 4 of them because you got to take in consideration commission. Commission is always something you have to consider when you're investing. That's just rule 1 of anybody's investment strategies. Recognize your commission, what to do to keep your commission costs down. So now, like I said, $20 shares, you can buy 4 shares in your commission, or invest in a quality company that sells. For 5 shares, you could probably get 18, 19, pay your commission, and you know what? You have 18 shares that you can go back and keep accumulating at that rate, and then before you know it, you have a lot of shares, versus buying a high price share that it's gonna fluctuate back and forth, but you won't be able to own enough to receive the benefits. So the mega caps and the large caps with the $50 and $100 price shares, if you want to invest in those kind of companies, I would invest through a fund, either it be an exchange fund, an index fund, or even a mutual fund that purchases shares into that company, so that you can have some of the exposure of ownership in that company without necessarily acquiring shares in that company. That way, you can reap some of the benefits, but with lower money, because the mutual fund price will invest in several of those companies, and then you get exposure to several mega cap companies, and then still at a fixed price. Because to take on the acquiring of mega cap stocks with their high prices of $70, $80, it's possible. But then again, it's a slow process and you own less shares. My goal is I want you to own more shares of valuable stocks. So, in summary, when it comes to market cap and capitalization, my advice to you is to stick between mid-cap, large-cap companies. And if a mega-cap company is within your investment price budget, go for it, but make sure all of the criteria meet your criteria, your price to earnings, your earnings per shares, your other ratios. Make sure all of that's met. And you know what? I always say brand recognition. Make sure you believe in that company's brand and you stand behind that company's brand. So that's my summary of what market cap is and what does it mean to you. Once again, this is the Small Money Big Dreams vlog. I'm your host, Marvin Spinal, and I will see you guys at the top. Signing off.